You're listening to AI Prism from Seoul Economic Daily.
A regulatory gap is widening, and Korea's financial authorities are watching but not acting. Samsung employees can borrow 500 million won at 1.5% for housing. The commercial bank ceiling is 7.31%. Corporate internal loans sit outside Korea's DSR and LTV household debt regulations entirely. The Financial Services Commission has confirmed it is not planning to intervene. It's Tuesday, June 2nd. Let's break down what's happening in Korea's financial sector. Korea's household lending system runs on two primary tools: DSR, debt service ratio, which limits total annual repayment to a share of income, and LTV, loan to value, which caps borrowing against property values. These apply to banks and mutual finance lenders. Corporate internal loans funded by company welfare funds fall entirely outside this framework. Samsung's new 500 million won program at 1.5% changes the risk profile of that gap. In Seoul's regulated zones, the mortgage cap for premium apartments priced at 1.5 to 2.5 billion won roughly 1.1 to 1.8 million US dollars is 400 million won. For properties above 2.5 billion won, the cap is 200 million won. A Samsung employee using the internal loan can access up to 300 million won more than regulated channels permits for the same property. SK Hynix's union has formally demanded parity, up from the current 100 million won at 1.5%. Kakao's crypto subsidiary Dunamu already offers zero-interest loans up to 500 million won. Public institutions including Korea Development Bank and Korea Asset Management Corporation run their own programs in the 100 to 160 million won range. The FSC reviewed the situation and declined to act. A senior official stated internal loans are labor management welfare agreements, not financial products, and that the agency is not currently reviewing incorporating internal loan into household debt management frameworks or DSR calculation. The concern is compounding inequality. Employees of large conglomerates, already classified as prime borrowers by commercial banks, gain additional leveraged access to supply-constrained Seoul real estate. Dongguk University professor Kang Kyung-hoon noted the arrangement could become a factor widening the asset gap over the medium to long term. One other finance sector development, Woori Bank announced a 3 trillion won, approximately 2.2 billion US dollars, commitment to SME succession financing over 5 years. The bank has already signed MOUs with 554 companies. The economic impact projection, sustaining 10,000 jobs and preserving 10.7 trillion won in annual sales base. The model draws on Japanese succession fund structures used by Nomura and Mizuho, where non-family succession through management buyouts has grown significantly. The FSC's decision not to regulate internal loans is a structural judgment that current scale doesn't warrant intervention. That calculus changes if the Samsung model spreads to the 30 largest employers simultaneously. SK Hynix's negotiation outcome is the leading indicator. On the BOK rate path, Governor Shin's few obstacles comment Tuesday signals a second-half hike is likely. For bank analysts, this means improving lending yield but continued pressure on deposit pricing competition. What to watch? SK Hynix labor negotiation outcome. Will 500 million won become the new large employer standard? FSC policy signals any reclassification of internal loans would be a significant shift. Bank of Korea rate decision, Q3 2026, most likely window per current guidance. That's today's AI Prism, Finance Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a 1 IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.